Well, here's another spooky headline. We could be heading to the largest housing correction since World War II. So let's look at some data and some numbers and talk about what we think is going to happen. And starting off with some quick background, in October 2022, house prices were up 38.1% since their levels pre-pandemic in March 2020. And some experts are predicting another 10 to 15% drop by the second or third quarter of this year, 2023. And there's some other factors to consider when looking at a further price correction, such as the construction fell for new homes in the third straight month in November. And other factors such as a fear of a recession and some of these large tech companies and other companies out there that are going through layoffs in preparation for a potential recession. However, there's some factors that are offsetting that, such as a relatively low home supply with only 3.3 months of inventory on the market, and the fact that a majority of the people that have home loans right now either refinanced or purchased homes during 2020 and 2021 when rates were at their historical lows in the low 3% and even some people in the 2%. Which just means, why would someone sell their house when they have a 2.5% rate and go buy something with a 6.5% rate and almost double their payment? And since World War II, where we're sitting at right now, this is the second largest housing correction behind the great financial crisis of 2008. But to put it in perspective, there still needs to be a 20% drop in home prices in 2023 to put houses at that pre-pandemic levels. And to illustrate that for you, this graph just shows the prices in 2022 versus prices in 2020, with the red line being 2020 and the black line above me being 2022. And as you can see, the median sales price nationally in March of 2020 was about $275,000. And you can't see the tail end of this black line over here, but that median home price over our latest data is about $350,000. So even if we drop 20%, that's about $70,000 down from where we're at right now, which would bring that 350 to about 280. And just to show you where we've gone so far, our peak in about May and June of 2022 is about $390,000 for your average home price. And like I said, now with our latest data, we're about $350,000 or around 10 to 12%. So what exactly does this all mean? Well, as I said in a previous video, I think in Q1 of this year, we still have around 5 to 7% to drop in home prices and home values. And by Q2, we'll probably level off if interest rates come down to where they would need to be for people to jump back into the market. But at the end of the day, none of us really know exactly what's going to happen, and all we can do is make our best guess with the data information that we have. And a lot of it's going to depend on what happens with the US economy, if we go into a deeper recession, if we see more layoffs, and some factors like that. But I want to hear your opinions. What do you guys think is going to happen? Let me know in the comments.